Crypto markets rebound sharply as geopolitical tensions ease. Regulatory policy moves the right way on stablecoins, and rate cut talk comes back for July FOMC from Fed speakers. Is it finally time to take out the highs? Find out in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT. And today's special guests are Nate Cox, Chief Investment Officer, and Conrad Carvalho, Head of Trading from 2 Prime. Welcome to the show, guys.
Thank you. Thanks
for having us.
Yeah, welcome, guys. Good to get you in the studio finally.
Now, you are well and truly outnumbered, my friend. We've got 3 options traders here.
It's all the vol guys. All the vol guys. Keep talking about hedges and selling vol.
Exactly. I'm super excited about this one. So why don't you start us off then, Nate? Tell us a bit about 2 Prime and a bit about what you guys are up to over there.
Sure. Yeah, thanks. 2 Prime's an investment advisor primarily. We started off really in the crypto derivative space, targeting Bitcoin yield for clients. So our clients tend to be more on the institutional side, large crypto miners, institutions, exchanges, asset managers, family offices, and fund of funds, but really focused on generating yield in kind for BTC and ETH holders. And that's why we always, primarily use Deribit as our trading venue. And now more we're focused on the lending and borrowing space. We've grown our lending AUM to about $1.5 billion over the last 16 months. So it's been a really great run for us. We started in 2020 and just recently brought Conrad in as our
we had him on the show last year, right?
Is that where you spotted him, Nate? On the show?
We actually we met at a conference here in London, or we missed each other, but we connected via I think Telegram and the messaging app, and just got on to talking in derivs, and a couple of people told me Conrad was a really good guy to talk to, so I feel really lucky to have him on.
So it's your fault that vol's at 0 on Bitcoin, then.
Yeah, no, thank you.
So tell us, what is your role over there now? What are you kind of spending your time doing?
Yeah, well, maybe I could step back and talk about sort of Ultra Lion. So I guess it was brilliant to meet Nate, and I love meeting people who love crypto options as well. And there aren't many of us, but so developing from that and sharing ideas. But what was in our conversations, Nate turned around and said, "Look, we need someone like you." And I was like, do I move on from Ultra Lion? But then here I am in a firm that's like hundreds bigger, 5 years ahead. I've almost stepped into the future, and I get to work with more people. It was a little bit lonely with me and one other, and now I get to work with a team, gets to argue with someone, get to agree at sometimes, and develop what we're doing in options in angles that I hadn't thought possible. So it's been brilliant so far. But my brain's grown twice the size since joining. A few more grey hairs as well, but it's been so far a brilliant opportunity.
And are you guys focused primarily on Deribit exchange in terms of what you do, or do you do a lot of other stuff as well?
Yeah, I mean, almost everything's Deribit.
It is, okay.
And my focus and my love is the options side of it, as well as futures yield and perp funding rate. I don't necessarily call perps derivatives, but but I have to include it in there because it is pretty interesting as well.
And is it? I mean, I trade obviously crypto options as well on Deribit, and for me, one of the big differences that I kind of have to get used to is the 24/7 market. And the fact that it never shuts, it's even open at the weekends and stuff. I mean, is that that difference between that and TradFi, like, is that something that you've had to like really think about a lot and take precautions? Like, do you have to have a lot of bots that are there ready to hedge your risk when you're not around and stuff? Because I'm guessing you don't have people literally there at the desk the whole time, right? Even at weekends and 24/7, right? So,
yeah, I mean, it's something I've had to develop. Coming from oil derivatives, I was working 8 till 8, covering Europe, Asia, and US. But there were times when the markets closed. You have official closing figures. You then have to think about sort of overnight jump risk and other things like that. And that's what I think makes Bitcoin particularly interesting. And a question for maybe later is, what is the structural vol? And a function is the fact that it's 24 hours. But you have different issues. One, you don't have an official closing price. So how do you even measure accurately sort of a day-to-day vol? 24 hours. To go back to your question, I've always had to think about position sizing using scenario analytics. So try and look at all the different situations and where could things go wrong. And inevitably, from a discretionary point of view, it means you maybe have to position smaller, or I wouldn't recommend it, but unwinding positions while you're asleep and then putting them back on, that's not really a viable angle. But position sizing, risk management, you have to be much more careful with, or systematic. If you can build really good systematic tools, which some of the stuff we've got is pretty brilliant. It's one of the things that I was a bit more scared to develop under Ogtree and Lion, but at 2 Prime, it's been done brilliantly, and that is a key thing I think you need when you're trading 24-hour markets: that ability to trade while you're sleeping.
Yeah, I mean that's something that I came from the TradFi space and obviously enjoyed weekends and evenings where the markets were actually closed and only checking, a few different European and Asian tickers. But crypto, obviously, there's no break. And when I started in crypto, it was 2020. I found out very quickly that I couldn't stay awake 24 hours a day, 7 days a week, as much as I tried. And even with 2 or 4 people in different time zones, it's still an impossible task to really be on all the time unless you really have a global team. But that's where, from our side, in terms of how we've integrated our tech stack and sort of built out this quantitative approach, that's what's allowing us to trade 24/7, is really having these automated systems that can trade 24/7, because you really can't do it, by yourself.
Yeah. What brought you into crypto, mate?
I was sort of a staunch resistor for a long time. I was in TradFi, and I remember when that pizza got sold way back in, I don't know what year that was, 2011 or whatever. And I remember this is such a scam. And then eventually Alex, my business partner, he called me in 2020. And he said, I've got something that you should look at. I came from the derivative space. I was managing a hedge fund that was VIX and SPX derivatives, vol strategies. And he said, you should look at this. There's a lot of volatility in this space. And if you're a vol trader, if you're a derivatives trader, all you have to hear is that word, volatility. And you go, I'll take a look.
That's what sucked me in, for sure.
Yeah.
And it was trading, I think, D-vol was like 150 or something back then. It was pre-D-vol, but
the good old days.
Yeah, the annualized vol on BTC was like 150, and ETH got into the 200s at one point. And that was kind of the thing that drew me in. I was like, man, there's a ton of opportunity here, and obviously the markets weren't as liquid, and so there was a lot of I would say edge in just some of the spread trading and that kind of stuff. But that's what got me in, is just the idea that, hey, there's this new volatility asset that, when the VIX is trading at 13, you're like, oh, this is a snooze fest. And then you see something that's got 150 vol, and you're like, okay.
Problem is, though, you look at the way vol's trending in crypto.
Yeah,
it's not going the right way for us, mate. It's going, Bitcoin front end at 30, handle 40. At a push, it's maturing too much.
Yeah,
Whereas ETH is still in the 70s, right?
Yeah.
So it's clearly not as mature. But it does seem like we're heading that way. Do you think that's a trend that's just going to continue? And because of all this institutional adoption and all this money coming in and all these overwriters, I'm sure a lot of your clients are just overwriting and supplying all that vol on Bitcoin because they've got bigger holdings of Bitcoin in their treasury relative to, say, ETH, where we used to have an overwriter a couple of years ago.
Yeah.
Where have they all gone?
Got blown out, I think. But yeah, to your point, I think, it's sort of the unfortunate conclusion for every asset as it matures, is that, you're going to look at the volatility over time, and it's definitely going to compress as, managers are more sophisticated. You see call overwriters coming in. You see firms like us coming in and basically, systematically selling vol. You also see, like the MicroStrategy or strategies of the world. These guys are extracting some of the volatility premium just into their own stock and their own option markets. And so I think it's inevitable that, there's vol compression over time. I kind of think this is a good thing in the sense that you have a more stable market, and it obviously becomes a more investable asset. Certainly if you want the price to go up, this is sort of a natural progression that helps it become a highly investable asset. And then you can look further down the curve if you want to chase the volatility. I mean, ETH is still at a 70 handle vol, and if you want to get into the Solanas and the XRPs of the world, you can certainly find vol, and I expect those option markets over time will also, gain traction.
How far are 2 prime down the curve? Is it Bitcoin ETH at the moment?
We're Bitcoin only.
Bitcoin only.
Yeah,
okay.
we did Bitcoin ETH. We tried Sol back when Deribit launched options. I don't know, whether 21, and there just wasn't enough liquidity, especially on the institutional side. So, and we've actually pulled more into BTC, and this has a lot to do with the clientele that we serve. They're predominantly institutions, and Bitcoin is sort of the treasury reserve asset right now. But yeah, that's at least where we've chosen to focus.
Yeah, you used to trade the RV when you were back at your old shop, the RV between ETH vol and Bitcoin vol. I've been looking at that recently. It's 20 vol points in the back of the curve. I haven't seen it that stretch for ever. Is that a massive sell to you? Because it looks like a sell to me.
I no.
Is it not?
No.
Okay.
I mean, one of the things I've noticed, what I call quantitatively intractable. It's become much more difficult to identify behavioral patterns, and I think it's partly because the demographic of people active in ETH, it's I don't know why it's become more dominant by bigger players, a small handful of people with big wallets. Whereas Bitcoin's much more distributed, I think. It still has some big heavy hitters, but there's a wider range of people with a wider range of ambitions and ideas and needs, whether it's buying puts for hedging or call overwriting or or all the different various types of hedging and strategies and trend following, all these things. All of these feel much, much harder. There's a lot more noise, a lot less signal in ETH. So it's difficult. So yeah, 20 plus, I still see, and if historic vol is nuts. It's completely nuts.
Yes, 40.
And you see that in the price. And it felt like there was one or two. There was maybe 2 or 3 big players who actually moved the price down and then back up.
Are we talking about the price of spot or the price of vol?
Spots, yeah, ETH,
Okay.
yeah. And that's one of the factors that's driving this high vol.
But it has periods of doing nothing. Like it just sits there in a tight range for like 2 weeks, and you're like thinking, "Oh, finally, it's safe to sell vol," and then it'll move like 30% in a week. What's that about?
Yeah, it's not enough to be just high vol. It's got to be as non-normal distributed as possible.
That's right.
So whatever it's going to find ways to mess
screw you.
Yeah.
And more so now than ever. I've noticed this year in particular. It's that behavioral pattern has really diverged from BTC.
Yeah.
So yeah, no, I in my head I'm thinking 20% may still be a bit cheap, and maybe more stuff can happen. Though we are going through this quiet period, but I just feel like more stuff like this is going to happen that happened since the beginning of this year. When it falls down to to a one handle and back up to 2,800 as well. So. Yeah, a bit too dangerous.
Bit too dangerous.
It's a dangerous one.
Yeah, I wouldn't sell it in the front end. I think selling any real gamma is too dangerous. I agree with that. But I'm talking about December or longer, right? Because you can kind of do that and not get too hosed by the big moves because it doesn't have a lot of gamma on it, right?
Yeah.
On long dated options on that high vol. So I just wonder if that's a safer way to kind of play, rather than selling gamma and say, I think markets can be range bound for the next 2-3 months, right? If you get into that spread short ETH, long Bitcoin at 20 in the end of year maturity, if we do stay quiet, that could easily tighten to 15 vols or something like that, right? So I kind of feel like that might be an alternative way to extract some risk premium without being outright short a load of vol or gamma.
Yeah, I still think it's risky. I mean, that could go up to 40% plus.
Oh wow!
It's a difficult one. I mean, if ETH can find its footing and reestablish itself and fend off the whoever wants to turn it. Solana, it used to be ADA as well. XRP, they're sort of going to take the place of ETH. Once that, if they can win that and keep developing and stick to their mission, it's maybe. But yeah, for now, I think the best thing to do is watch and hide from it a little bit. But it's a good question. What is the structural vol of these things? So, in summary, ETH, I think, has much higher structural vol. What is BTC's? Yes, 24 hours. You're always going to have these long periods where nothing happens. And then stuff happens maybe in sort of compressed windows or jump risk. It's a tough thing to monitor. I think when I was on the podcast last time, I I hinted that I thought structural vol for BTC or long-term vol was around 50 to 55%. It's now Oct, Deccan, March, the vol's around 47.5%, and still drifting down. That's a tough one. What do I think? It can't go too far down because it is 24 hours. What asset can respond to events on the weekend? It's going to be BTC. So there's going to be more things that can drive that price versus a TradFi asset.
I mean, historically, like the kind of way it's traded, on the upside, vol can be quite explosive, right? And then on the downside, vol often compresses. So now that we're kind of getting to that point where we're quite close to the highs again. I thought this would happen last time when we broke through 110k. I thought vol would catch a bid, right? Because, you know, it's now making new highs. Vol's reset already to a lower base. Everyone's going to pile in and buy calls, and vol's going to explode on the upside. We're used to seeing that. Didn't happen last time. So is that now something that is a thing of the past? Like, do you think if we make new highs and we go to like 115, 120k, vol doesn't really respond the way it used to and catch a bid like we're used to seeing on the upside?
Yeah, but many years ago, oil had super premium on the calls, and then that switch, then it goes back and forth a bit more dynamically, kind of reflecting the change in who's involved in this market, retail and leverage, institutions, and as we move into that, I would expect call skew to be maybe even go negative and persist there. Right now, my hypothesis is from now for the next 6 months, there's a lot of people having done the call override. There's a lot of calls in the market, and you're starting to see sort of negative spot vol correlation. It's like as time goes by, you get more dots on the scatter plot, and it sort of asserts itself a bit more. And so I think this period all the way up to 125, I don't see vol exploding.
Yeah.
Do you think
I see it maybe exploding if we fall, and we did see that, but it's hidden by the fact that it was driven by an event.
It's strange as well, though, right? In so many metrics you're looking at, like when we hit like those new record highs,
Right.
No euphoria, no signs of FOMO, funding was pretty muted.
Yeah, muted.
So it's a really weird, it feels a really weird cycle.
I think it takes a lot of the, when you have the positive spot vol correlation, it's usually narrative driven, or at least it has been more recently, right? I think there was some like market structure where you had a lot of FOMO chasing when we broke out through highs, but you saw that like when we broke through like 10 and 20,000 and we moved to 60. But the most recent breakout where we actually moved through a high was November, right? It was the election. And so very much narrative driven. And a lot of that positive spot vol correlation comes from the uncertainty of how far this can go based on this narrative. And I think, recently when we popped and hit 112, the question was, what's the narrative that's supporting us moving through to 125 or 130 or 150 other than FOMO? Because if FOMO is the only thing that's going to take us there, it's not a strong argument for me as an investor to go, yeah, I want to be a call buyer at 112. Nope. Institutions, at least, if there's no uncertainty as to why it can continue, I'm a net call seller. And I think as you see markets get more sophisticated, you see this more often, is that without a real sort of spot driven rally, there's no way that I'm going to step in as a institutional player and say, yeah, I'm willing to buy these calls when you're, and sort of have the expectation that we're going to 150 without an election, or especially with, some sort of geopolitical risk, which is really telling me, yeah, where is the uncertainty right now? It's more to the downside with Iran and Israel than it is with like the November election.
Yeah, it has been really resilient, I would say, though, Bitcoin relatively.
For sure.
I'd say it's felt a bit more resilient than equities have. But on that point that you're making about, okay, so it does seem like upside isn't going to be quite as explosive. Doesn't it just make it an absolute no-brainer for your clients, like these big treasuries, to be doing like risk reversal hedging across on their treasury, right? Because I've been doing this in my hedged crypto strategy for the last 6 months. Yeah. And it's served me pretty well. But I would have thought as more and more people cotton onto that dynamic, you will start to see the skew trade input premium like equities does, because it's a bit of a no-brainer. If you own like yards of this stuff, why are you not hedging it? It makes no sense.
It's an interesting divergence between the dollar-based investor and the Bitcoin-based investor too. And I'll say that we primarily deal with the Bitcoin-based investor, which is to say, if you look at the mining space, these guys are really focused on accumulation, right? Even Mara recently and some of the other miners, they're actually financing through debt offerings the purchase of Bitcoin. So now they're going beyond just
I find that a little bit weird.
It is. There's a conviction level here, but also, I mean, if you're truly a maxi, right, which I think a miner is the strongest expression of being a Bitcoin maxi, you've built a whole business around this. You obviously have a pretty strong conviction in terms of where the price of this is going ultimately. And strategy is another example of this. And, what would drive us to these new highs, I think, on the macro side, it's the de-dollarization, at least in the US, right? You're starting to see, dollars down 10% since January. You have the lowest exposure on like asset managers in the last 20 years to dollar-based assets. So, that as a macro tailwind for BTC, obviously gold has benefited the most from this, but I think these are the things, and partially why it's been so resilient is even in the face of this geopolitical turmoil or whatever, you're actually getting this like net tailwind that's coming from maybe fiat has some real risk, because that as an idea, if that really catches on, where does the limit go for Bitcoin? Obviously, this is the hyper Bitcoinization that people have kind of fantasized about for 10 years, but it's certainly the thing, 150 is you'll see it in the rearview mirror if people really start to catch on to this idea that the risk is in fiat. So that's, I think it's an interesting way to start to look about like what's the narrative that will drive us through and give you that positive spot vol correlation. It's somewhere in fiat risk.
So obviously there's more and more, which again, I think we are actually starting to see like the institutional flows and that institutional adoption and just comfort around sort of Bitcoin as an asset to hold. So companies, treasuries, long Bitcoin, sat on loads of Bitcoin, want some sort of yield on that, come to you guys. So what are the kind of strategies then that you're sort of working with them on? What are you speaking to these guys about?
Yeah, I think the message that we always try to give to our investors is we want to help you stack Bitcoin. And ultimately, we want to help you make Bitcoin a productive asset. So in the world where Bitcoin is sitting on a balance sheet doing nothing, you would never, as a public company or a treasury manager, let your dollar sit there and earn nothing, right? You're going to put it somewhere. And so Bitcoin hasn't had a place to go. And that's the problem that we're trying to solve for large institutions, OG Bitcoin holders is let's put some of this to work, and through derivatives and perpetual futures. And we're doing combinations of sort of traditional CTA style trend following and mean reversion strategies, pairing that with long short volatility strategies, call overwrites, but delta hedge so that we're actually generating Bitcoin. And we're not, we don't want to cut off that right tail risk. We want the appreciation for BTC. The last thing we want is to lose Bitcoin as we go higher. And so we're looking for ways to consistently generate a positive BTC return in sort of an all-weather market environment.
Do you have a specific like yield return in mind, or?
Yeah, we target 12 to 15% per year. That seems to be an area where it needs to be above what you could get as like a lending rate. Lending is usually, right now, I think it's 3 to 4%. So it's pretty low, and then you have some of the DeFi ecosystems that I think are doing around 4 to 6. But
it's kind of double the average yield of the funding trade, right?
Yeah.
The basis trade is about 6%.
Yeah, exactly. Right? Yeah.
It's interesting because I guess some of the arguments for like ETH, is that because you've got a staking yield there, that institution, and we're starting to see some institutions and corporates develop an ETH treasury strategy, and people thinking that that's going to be more popular because of the ETH yield through staking. You get some yield, and that's what people want. But I guess what you're offering is allowing, if you're sat on your Bitcoin, that's been the problem. There's no inherent yield in just sitting on Bitcoin.
Yeah.
But now these are ways to earn yield.
Yeah, there are ways to do it. If you think about sort of the traditional finance, and even oil and gas is a great parallel. These guys, developed over 30, 40 years, they build their own trading desks, right? They hedge their own risk in the oil and gas industry, right? These guys have very sophisticated systems, their own quantitative systems for measuring risk and trading and hedging downside. So I think bringing some of that sophistication to the Bitcoin market makes a lot of sense, especially for now these treasuries that are holding thousands or tens of thousands of Bitcoin with similar scientific. Just they're announcing they're adding BTC to their treasury. You have like the Meta Planets of the world who are kind of doing the MicroStrategy globally.
I was going to ask you about that.
Yeah.
So all these copycats that are popping up, the strategy copycat, the MicroStrategy copycats, does this not concern you? Because to me it does. It definitely concerns me. Okay.
Yeah, it's like a little bit of musical chairs, and I don't know who the last guy is to enter, but you don't want this guy to find out that there's no chairs left. But yeah, I mean, it's concerning. Of course, if price goes up, great. That's
and the concern is because people are borrowing a load of money to buy it.
Yeah,
Not that they've just got this treasury
debt financed,
and they're like, we're looking at fiat currency debasement. They're saying, I want protection against that. So I'm going to switch my treasury into BTC, which was the first thing that Saylor did, right? Yeah. He was sitting on half a yard, or whatever it was, and he switched it to BTC. But then he got greedy, and so far it's worked, right? Exactly. But now everyone's like, oh, he's a genius. Yeah, let's copy him, right? And people like GameStop are doing it, for crying out loud.
Yeah, that was, I think, part of the plan all along, is if he can sell enough people on this idea to keep his, he's got a pretty decent average cost. But if you get the latest guy on, the last man on the totem pole is in at 105. Yeah, there's not a lot of room for error here if you go back down to 90 or 85 or whatever.
And the irony of, and we were saying earlier about how the risk shifting to the downside. Yeah, I think that's partly that supports that as well, because you've got these guys borrowing money and then just sitting on the bid and absorbing, like making this thing grind higher. Yeah. Okay. But then if something suddenly changes fundamentally and these guys are over leveraged, then you get the violent move down. Right. Right.
I think that's what everybody's trying to handicap, is how much sort of invisible risk are they adding to the system, because you can't measure it in, perp future open interest, right? You can't see it the same way you would visualize how much leverage is in the system. These guys have basically debt financed it, and you can measure it if you add it all up. But at the same time, I guess the other side is, how sticky are their hands, right? Are they diamond hands, or are these guys paper hands? And obviously, Saylor's diamond, and I don't think that'll ever change. But GameStop and whoever's been the last man to enter, I don't know how much conviction they have or how much their board has to really say never sell. But I think we'll find out. I mean, my hope is that we don't have to find out the hard way, but there may be a few sacrificial lambs out there.
It just feels like we're sort of going that way. I guess what it'll come down to is, the sort of term on a lot of that debt. If we are get an unfortunate time when the debt comes due, and then if you're in a Bitcoin drawdown, then that can accelerate that. What their operational revenues, and can that service the debt and things like that. So there's lots to kind of sort of balance on it.
But it feels like we're not near the end of that cycle. Like people are copying it, but so the fragility is building, but it's only starting to build. That's what it feels like to me.
Yeah.
But my only like just intuitively, you kind of feel there's this massive risk building, right? But my only bit of comfort from it, if I want to call it that, is never in my career has the blow up risk been something that we've all been like really aware of and attuned to.
Right.
So I feel like the fact that we all, that it's a known unknown. Like, it's kind of risk, it won't be the thing that causes the next big drawdown. But who knows? But it just feels. I mean, I think like the kind of strategies that I want to see, and the Bitcoin strategies is, when it's kind of backed by, we have like, operational revenues and things like that to service all of this. And this is just, we own some treasuries, we now own some Bitcoin, and that's kind of where you want to see it go. Yeah, it just feels a little bit uncomfortable when your actual business is just, we've set up a vehicle to issue debt to go buy Bitcoin.
Yeah, and it's like, we're a miner. Our whole business is dependent on Bitcoin being high enough in price so that it makes sense for us to mine it and then sell that stuff to keep our business operating. But on top of that, we're just going to borrow a load more money and buy Bitcoin with it. I mean, that kind of feels a bit crazy to me, right? If I was running a business. Now, it might work for many years, but
Yeah, but and then also if you're then able to generate yield on it, like 12% yield or whatever you guys can offer, then again it kind of makes it more of a sort of viable strategy.
Yeah. Well, I think, and a lot of these guys understand very well the sort of the debt markets and what their risk tolerance is based on the size of their balance sheet. I mean, Mara, as an example, they have over 45,000 Bitcoin, right? These guys can tap a debt market, and they also have a ton of reserves. So, they don't have the same risk profile as...
So their leverage ratio is
it's very low relative to what they actually have on their balance sheet versus, I don't know every other miner, but they're not carrying as much BTC as, let's say, Mara is. And so I think the risk, especially in this debt finance BTC, is, a GameStop, for example. I mean, they were on the verge of bankruptcy, and they kind of pulling Bitcoin out of a hat to say, hey, look over here. Is this a real strategy for them, or is this sort of a way for them to rebrand themselves as really now a Bitcoin treasury company and not a game rental and sales business? I think it's probably a sort of an exit for them to go into the BTC game versus GameStop game.
To have a bit of a visionary viewpoint, a corporate treasury isn't just to hold something. It's to have to have money for cash flow. Short-term holdings, liquid, illiquid. If you can earn a return, that's brilliant as well at low risk. What about acquiring other businesses? It could help influence or put a roadmap towards using Bitcoin as for acquiring other businesses, or even using it as cash. Maybe it's going to help influence that as well. But it definitely makes sense that these guys should be doing something with it. It shouldn't just sit there as well. But that this is another influencing part of the development of Bitcoin, corporate treasury, and developing functions to use Bitcoin in the same way you might use dollars and all the different mechanisms for that.
Another thing that kind of springs to mind as well is, have you noticed how MicroStrategy's realized volatility has completely collapsed, right? So they've been raising all these funds to buy more and more Bitcoin. And the idea was they could do that because the convertible bond that they were issuing had a call option embedded in it. And it was giving the convert arb guys the ability to trade that gamma. And the stock was winging around on 100 plus vol. So it was a very attractive gamma to own. You look at where vol is now in MicroStrategy, it's back in the 50s, right? And it's probably realizing less than that. So has this trade kind of now played out, and it's just sucked all the volatility out of that name? And, all these other guys are doing the same thing, and it's just supplying all this vol to the market, either in the treasury names or on Bitcoin itself. And it's kind of one of the reasons why vol's so low.
It's interesting when the premium was multiples. I think, what is it, 1.6 times now? That volatility is very much linked to that premium, why it exists and why it's such a crazy number, and why is there such huge leverage. But the trade is to capture that volatility, and it's being done quite extensively. For some, I guess it's still a way of accessing Bitcoin exposure, which is still a bit interesting. Now there's lots of other methods for doing it. Another big unanswered question.
Because I wonder would you rather be short calls in MicroStrategy or Bitcoin itself, right? That's
MicroStrategy.
Yeah.
Yeah.
I mean, I think so. I would have when the vol premium was, whatever it got up to. I know it was wildly overpriced, and I remember looking at it. I think it was in January or whatever it was, December of last year, and just thinking this insane. Can't continue. It was, I think it was trading at like 500 for intraday, and all you could think is, I was looking at it like, man, I wish I could sell this vol. Or I think in the TradFi space there were plenty of trades where you could be long IBIT vol and short MicroStrategy vol, or some sort of proxy for the vol arb trade. And that's.
Do you think IBIT's having a big influence on the market yet, or is it still growing?
I mean, I have to think it is. I forget what they did last. They did 1.2 billion in inflows last week. I mean, they've had 6 weeks in a row, just the last 6 weeks of all.
I mean, the vol market, so options on IBIT.
Yeah, I mean, certainly, I think as they accumulate more BTC, there's a commensurate amount of trading that moves into IBIT, right? I mean, I think any of the sophisticated TradFi guys are going and looking at these options and saying, hey, this is another place where we can call overwrite or whatever and generate yield. And so naturally that is going to compress or at least extract some of the volatility from the market. So, I mean, I think that's part of why we see this trend, is that you're seeing vol distributed now to all of these proxy trades, right? It's in Coinbase and Mara and Hut and everywhere in the TradFi markets, IBIT and all the ETFs. So yeah, it's being distributed.
Is that part of your business, like arbing the vol spreads between those assets at all?
Not yet.
Not yet.
Yeah.
Not yet.
Yeah.
So I imagine there's some opportunity there, right?
Yeah, I think so. I mean, I think as a vol trader, you're always looking for where vol is flowing and where it's going. And, we've already had a lot of interest in IBIT option strategies. So that's something that Conrad will ultimately take charge of. And yeah, hopefully we'll have something to deploy in Q3 or Q4.
Nice.
Yeah, I mean, I think it's a brilliant. There's a few things that make it particularly fascinating. One is you can trade options out to 5 years. Most of the market, Deribit is about a year out, but 5 years out, that's going to be brilliant. That's going to be really interesting. And then you've got a different demographic of people that can access that and do access it. And it's a little bit like, you've got the Asian exchanges in crypto versus European and versus US. It used to be more the volatility was in Asian time, and now it's shifted to US. So you have all these kind of opportunities. If you can understand the demographic of those active, why they're using these options, and how, then there's a bunch of opportunities there. So, and these are probably structural. These are probably going to be persistent biases as well. So yeah, no, I'm so excited to look at this stuff.
Nice.
Yeah, and where's what do we think on Bitcoin right now?
Okay. My personal view is I think we could see 175 by the end of this year.
175.
But yeah, I mean, it feels tough. It feels like it's going to be quiet. There's going to be a lot of noise, as there has been the last few summers, July and August. It's going to be watch out, be careful, or be prepared for some jump risk on low liquidity. And then after that, I think it could be really interesting. I think it's going to be really interesting. A lot of people are building, developing these strategies for themselves or getting involved.
Do you see any particular sort of catalysts to drive that move, right? Is it an ongoing, like we've been seeing, just ongoing inflows and institutional adoptions, that story just slowly continues to play out? Or do you see any like hurdles that need to be cleared for it to be game on, and that sucks in a load of money in a short amount of time?
No, I think there's been persistent accumulation, and now that corporates are more and more sort of visibly getting involved, and there's going to be more that comes, I think that's going to drive a nice steady move up. Should we be a lot lower now with everything going on? It's probably not, but should we be much higher? I'm not sure why we're not higher right now, but we are where we are. And I think October onwards is going to be exciting, really exciting. I mean, the next few months could be exciting. That I have less certainty about.
And the Ethereum catch-up trade, is that something you would allocate anything to, or do you think you'd rather just focus on Bitcoin because it's got such a solid base and it's got so much real money that's coming into it, whereas Ethereum's still a bit hit and miss, like you said, with the competitor altcoins out there and stuff?
I mean, I love geeking out on, it's hard to go deep when you're looking at too many assets, but when you're looking at one, you can really look at some really deep, interesting ways of and research and ideas. And I quite like that idea. I've been thinking, I do love Ethereum. It's one of the ones I grew up on. I say grew up, it's only been 5 years or something. My digital assets growth has been on Bitcoin and Ethereum. I do love the vision. I love, the ideas. I love what it's being used for. I like the idea that it's the kind of the oil of the digital asset space, and Bitcoin is the gold. There's this partnership that I think is very useful. Could you have more use cases in a corporate treasury? Actually, maybe. But I've got to observe it and see and pick the right time to get in. Right now, it's still quantitatively intractable.
I've got one last question. Have you seen what Circle has done recently since the IPO? It's gone from like $60 to $300.
Yeah.
Is that overpriced at these levels?
So I was reading a little bit about this, and I think Circle and the investment bankers behind that, I think they actually priced it really well, and I think they did it for a reason. What I see is this was a huge way for Circle to get so much attention. It was the most successful IPO since like 2021. They tripled in the first day. They continued trading higher. I think they listed at 31. So they went from 31 to like whatever 130 in the first day, and now they're at 270, 250. Yeah. But the point is, most people go, they mispriced it. It was priced too low. No. We're talking about it right now because it's actually been one of the first and real, opportunities for retail traders to actually get into an IPO and still make money. In terms of, and I think that's, kind of a nice, it's a good look for crypto. It didn't IPO at 170 and get slammed. It actually IPO'd below its value and gave people an opportunity to buy and own something that, God, is already whatever, quadrupled, quintupled, whatever it is. So, I think that's a good look for crypto, and it created a lot of positive buzz.
We were talking about 200 vol assets. Well, that's pretty much where vol is.
There you go. Yeah, if they had a derivative market on this, I'd be all over it.
Yeah, they do.
Yeah.
Yeah, I guess like my worry on that is like with a lot of these stablecoin companies is, we've started. We've not spoke too much about the macro, but there's been a few comments this week from Waller and a few clearly maybe a little bit of vying for the Fed chair job when it comes up. But talking about maybe July cuts, the Fed last week still laying up for 2 cuts this year. September.
It feels like he's contradicting what Powell's been saying though, right? Like Waller's saying, cuts in July maybe, but Powell's been pretty adamant that it's too early.
Yeah, and I think the Fed are still like 2 cuts this year, and to be honest, it feels. Things are quite evenly balanced. The US economy is definitely slowing down, but there's all these uncertainties. But it's still resilient. Labour market still looks resilient, softening but resilient. Inflation's still a little bit too high, so there's kind of no need. It doesn't feel like looking at things immediately to cut. So perhaps there is a little bit of Waller and others sort of putting their hat in the ring for the Fed job and trying to please Mr. Trump. But I still think we're in that kind of slowing disinflationary world narratives, notwithstanding tariffs notwithstanding. If rates do come lower, aggressively lower, I actually thought it was really interesting that the S&B are back at zero rates. We're back to ZIRP, zero interest rate policy, which tends to have this gravitational pull on global rates as capital starts to find yield. What does a stable coin business look like if yields halve and they're basically earning their revenues from treasuries? I think that's interesting. I also think with Circle, half of their revenues go to Coinbase, right?
It's
Coinbase to buy.
But you're saying so Circle stock has got like some embedded exposure to yields, basically.
It's you're essentially short duration in my mind.
Right.
Because if fuel starts to come a lot lower, you're kind of it has impact. Obviously, there's network effects and how that story sort of plays out. It's interesting. I actually think we say about like all the treasury, the Bitcoin treasury strategies. I kind of think like one of the bubbles is in this proliferation of stable coins. Because I'm not sure where everyone gets the network effect. I kind of feel like Tether, Circle have kind of won.
Yeah, Circle's tie up with Coinbase and Shopify was huge, right?
Yeah.
That made the stock rally hard last week, right?
Like if you're a corporate that has a huge network, Amazon, then that kind of makes sense, all right. But if you're trying to be another Circle or another Tether.
Yeah, it's probably too late.
Yeah, it's kind of how are you going to get that distribution and network effect? To make that, and also what are you adding that's not there already within it?
Yeah, what problem are you solving? It's been solved.
Which I'm probably going to piss a lot of people off. Maybe
we should call it a day. All right, no, guys, it's really good to have you on the show. Excellent conversation. Appreciate your insights.
Yeah, no, thanks for coming on.
It's been great.
Brilliant.
All right, guys, remember, like and subscribe so you can get more of this content. And we'll catch you back here next week. Cheers.